Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some Bulletin board hero stocks on Thursday, November the 13th. I've got quite a difficult selection here today, difficult from a technical perspective. First up is African minerals, where there have been several doubts on the fundamental front. On the technical front, we've got this wedge-shaped formation, a rebound and double bottom bounce off the former October 10 pence level, 2-3 days of finding a foot here around the 10 pence level earlier this week, and then the sharp break to the upside. Probably the best way forward here is to assume that there will be support coming in at or above the 10-day moving average shown here in green at 13.27 pence. While that holds, we could head back towards the 50-day moving average shown here in blue at 18.6 pence. As is normally the case, one would really want to see an end of day close back above the 50-day moving average to be significant enough to suggest that the shares are in sustainable recovery mode, and in fact ideally a higher low above that level or that feature before assuming that there could be decent upside here. Next up is Bacanora Minerals, where there's also been a tussle with a 50-day moving average in the recent past. In this case, it was October's high towards the 70 pence level, and the 50-day moving average blocked that rally. We are on the bias towards the bull side at the moment, given the unfilled gap to the upside and bear trap really just below 40 pence that was seen last month. New support looks to be coming in at 50 pence. It's been multi-tested over the start of November, and at least while there's no end of day close back below that July support line, we are looking for a retest of the 50-day moving average at 60 pence. But as I've said, in the case of African minerals, we would be looking for an end of day close back above the 50-day line to give us the big price here, which would be a return to the top of the July channel, currently running towards 75 pence. Next up is a stock which has been difficult to get a handle on in the recent past, especially after the double top that we saw in the summer through 40 pence. One would have expected perhaps another attempt on clearing 50 pence going into August, September, but it was not to be. There was a gradual drift, and that's sort of been marked or added to over the course of the autumn. 50-day moving average of 17.44 pence is currently the initial target here. Support towards 12 pence, which is this line from June, and the bottom of a triangle formation. If you're cautious on the shares, maybe you'd be waiting for the 50-day moving average to break for the first time really on a sustained basis since August. Otherwise, there is an opportunity to at least bottom fish the shares with a stop loss just below 12 pence and looking for the 50-day moving average as the target, especially as we've got bullish divergence here, or a bullish divergence line in the RSI window from the beginning of last month. Finishing off with the most difficult stock of the lot at the moment. Obviously, on a fundamental basis, there are plenty of headwinds, plenty of clouds here, but there has been an initial bounce off a falling trend channel from June. That might work to give us at least an intermediate rebound. Best case scenario probably now is a return to try and fill this gap towards £1.20, which started off a brutal breakdown this week. The 10-day moving average is also around that level, shown here in green at £1.14, and we're also backed by at least an initial rebound of this RSI support line from August from a very oversold level. So dead cat bounce here, probably sort of ending up towards £1, £1.20, even if the shares then fall back away after that and retest yesterday's 60 pence support zone. But of course, more updates on spreadbetmagazine.com over the next few sessions.